What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. The weekend is here. And I know you all been waiting for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. And this week we have a ton of news to go through, so we better not waste any time and kick things off like we always do with Meta Platforms. Started the week at 136, hit a new 52-week low today, but rebounded slightly to 133.45. That was a 2.44% drop this week on Meta after the company rose earlier in the week after Reels monetization is, quote, wrapping up or ramping up. According to Citi, they are seeing that ad loads on Reels reached 14% last month compared to 8% in July and 10% in August. Obviously, there's a little bit of a balance here with Meta. They probably have enough to ramp up the ad load a little bit better, but it obviously hurts the user experience. And so certainly good things that analysts are seeing a little bit of a ramp up when it comes to those ad loads. Now, speaking of ad loads, TikTok is gaining on a lot of these companies in terms of those advertisings and certainly usage time as well, but they are racking up those losses as well. This company had revenue of about $18.3 billion during the first 3 months of the year. So it gives us a little bit of scope of this company's size. We know by following this channel that Meta does about $29 billion in a quarter, and the growth rate is essentially gone flat. When we do our Meta earnings previews, those are probably about 2 weeks away, as Meta has their earnings scheduled for 10/26. We will see that their growth rates, at least on that revenue side, basically have come to a screeching halt, whereas ByteDance's TikTok is up over 54% year over year. But what also is skyrocketing is these losses. They lost nearly $7 billion in operating losses just last year alone. This company is bleeding money. And so that gives you a little bit of hope, probably if you're a Meta investor and you're hoping that this TikTok investment or this TikTok competition not nearly as bad as it may seem at the current time. Well, this company is going to either have to ad load the product and put a ton more ads than they already are doing, or they're going to have to cut back in some ways to start earning a profit. Now, Meta Platform is working to shrink its offices amid ongoing work from home. This is across the nation for Meta, essentially coast to coast, as they also are closing one of their New York office buildings. Now, this is just a consolidation. It looks like this was a bridge space where they're completing some larger offices, so they're consolidating employees in one roof over at Meta. I think the cleansing that we're going to see in the Silicon Valley tech companies is going to be something that was much needed and will end up helping these stocks quite a bit, cleansing itself of some of this office space, cleansing itself of this excessive hiring that it does. And then we'll see as we go along the news stories today, shedding products that you no longer need. Moving on to Apple, started the week at 138. This one actually up 1.2% to about $140 per share. Apple is discussing a 2-nanometer chip process with Taiwan Semi for production as soon as 2025. Now, the nanometers mean quite a bit of things, essentially size, but it also is energy use and heat. And so the smaller the node, the less energy that it requires, and often the less heat that it generates. So certainly in personal devices like phones, which don't have fans to cool them off, certainly can be beneficial. It also can be beneficial on battery life as well, as these nodes continue to shrink. Should give Apple a competitive advantage, especially if they're one of the few companies that can shrink it to that size. Apple's antitrust fine was cut drastically by a French court this week to $366 million. It was set to be 1.1 billion euros. That was back in 2020, so that was in excess of dollars. Now that the euro has essentially reached parity with the United States, Apple's done a nice job kind of kicking this down the road, having currency work in its favor. A $366 million fine to Apple is simply a drop in the bucket. Now, Apple is slipping as UBS says the iPhone wait times are starting to ease, indicating that maybe we're having flattish unit growth. So these are the wait times on the new phones. If you're trying to order them online and pick them up in store, have them shipped to you, the wait times for those continue to shrink. It also is likely a sign that you have this initial rush for the people that were dying to get this new phone or dying to upgrade. They do that in the first couple of weeks. And then typically with Apple, you see a kind of a reacceleration with the phone buying towards the holiday season, which is fast approaching. Now, Apple is asking suppliers to shift some of their AirPod and Beats production to India. We've been covering this story for the last several weeks as the company is looking to shift at least a portion of its manufacturing outside of the country of China, which I think gives investors not a huge layer of safety when it comes to manufacturing risks, but maybe a little bit more than we had last year. Now, Apple's iPhone exports from India double, and they're going to surpass $1 billion this year, and it looks like they'll surpass over $2.5 billion through March of next year. Most of the India-made phones are getting sold into Europe and the Middle East. Now, Apple and others are required to use USB-C charging port by 2024 as the European Union passed a reform requiring all companies, including Apple, to change from maybe proprietary dongles and chargers to a USB-C platforms. Now, Foxconn cautiously optimistic about Q4 as it reports record September results. Obviously, most of that probably has to do with the fact that they had an iPhone launch. They saw their revenues total $25.9 billion in September. That was 40% year-over-year growth, and it was 82% higher than August. And so certainly showing that those iPhone shipments out of Foxconn's factory, very much attributing to those results. But the fact that this company is cautiously optimistic is interesting. Then we obviously saw those job numbers come in today. Now, those strong job numbers signal that maybe the Fed is going to continue to be maybe a little bit more aggressive a little bit longer. But what it also means, in contrast to that, is revenue and maybe even potentially profits at these companies could stay a little bit better than expected. Now, Apple is dealt a blow by the Supreme Court as it declines to hear its appeal over those Qualcomm patents. I'm not an attorney, but I think now this gets kicked down to the lower court, and that judgment, which says that Apple will need to continue to license thousands of Qualcomm patents in order to continue to make the iPhone, iPad, and Apple Watch, at least as it's configured now, are likely still in place, probably mildly bullish for Qualcomm. Now, the App Store saw its worst decline in history as the September net revenue fell 5%, according to Morgan Stanley. Not sure what we can draw out of this, but it could mean that that service revenue growth rate that we've seen over the last several years, actually, in fact, with Apple, which have spectacular software tech margins. Well, if that begins to slow, then this company certainly might need a new idea to reaccelerate its profits. Moving on to Amazon, started the week at 113. This one actually also up during this week. We have a very volatile week, obviously a bad day today on Friday, but Amazon ended the week up nearly 1% to 114.56. This is after Amazon saying it's going to hire 150,000 employees for the upcoming holiday season. So anybody that's looking for that unemployment rate to drop, it's not going to happen. Target announced that they were going to hire about 100,000 employers. Walmart going to do about 40,000. UPS doing about 100,000. So if you're looking for a temporary seasonal job, certainly going to be out there for you. Now, Amazon also kind of indicated there was still pretty strong growth across their retail lineup. So that honestly, I think we're going to have a little bit of push-pull, at least over the next, certainly the rest of this year and probably into early next year, where you're going to have decently good revenue growth rates at these companies, at least good enough. The earnings are going to be impacted by that strong dollar. Certainly the inflation cost of the raw materials and the labor, that's certainly going to weigh on earnings. And that could keep inflation a little bit more sticky and keep the Federal Reserve a little bit more hawkish for longer than maybe some people are expecting. The way these companies are going to fight back against that is the fact that Amazon is freezing its corporate hiring in the retail segment. Now, this is corporate hiring. Obviously, they're going to continue to hire that boots on the ground type employer inside those factories, inside those fulfillment centers. Those employees are still going to get hired, and there's going to be constant adding there. But at the corporate level, you're going to see a hiring freeze, and I love to see this from these companies. They have plenty of white-collar workers that make way too much money. I would start freezing that and look to cut it. Other things that these companies are starting to look to cut are these fringe activities that they've been involved in. There's been an excess of money in the system, an excess of profits, an excess of investor demand, where they're going to start scrapping some of these products, and Amazon is scrapping its home delivery robot test. Now, I don't necessarily think this is the future for Amazon. I wouldn't necessarily be looking to replace the delivery driver. That is something that I think is going to be hard to replace. What Amazon needs to look to replace is the over 750,000, and quite frankly, it might be over 1 million now, of those factory workers. We respect them, we love them, but if we could replace them somehow with some automated processes, well, that's what's going to drive profits over at Amazon. Amazon also discontinuing another product. This is the Glow video conferencing device launched during the pandemic. Obviously, devices like that not necessarily needed in today's environment. Now, Volvo Trucks is going to supply 20 electric vehicles to Amazon. These vehicles have a 300-kilometer range, but maybe get up to 500 kilometers if you give it maybe a charge during the driver's lunch break. These are going to be delivered in Germany. These certainly can produce efficiency and lower cost over at Amazon. I think we'll see a massive shift. We'll have a news story on Tesla here in a moment. We're going to see a massive shift in the trucking industry to these electric vehicles. Now, Amazon's pricing, I mean, we're talking about $1 billion. Rings of Power program dominated the streaming video ratings this week, and this is maybe the first time that I've seen this where it hasn't been a Netflix show. Amazon invested $1 billion over 5 seasons, and there are reports that the first season cost over $465 million. So they've spent nearly $500 million of that $1 billion just in the first season. Now they're going to be able to reuse some of the sets that they made, camera equipment, lighting, all those types of things will be able to reuse for subsequent seasons, but this was a risky bet by Prime Video, and we don't yet have judgment how many Prime subscribers this drove in, any kind of engagement that they have, maybe subsequent series that they can spin off of this, but this is a good sign that Amazon, while they spent a fortune on this, did get results when it comes to ratings. Now, moving on to Netflix, start of the week at 236. This one slipped a little bit, but not that much. Netflix is really shocking to me. This stock is really holding up well, down just 5% this week to $224 per share. This is after Netflix. This is surprising for me to Netflix, is they're placing Knives Out sequel in theaters before they go to streaming. This is called a theatrical sneak preview event where they air this a couple of weeks in theaters before taking it to Netflix. I actually like this strategy over at Netflix. I don't own Netflix. I want to make that clear. I don't own any Netflix stock. From a technical perspective, if you've been watching the show and studying that segment, there are some areas that I do like. And so if the stock gets into that area, I might buy it, but chances are if it gets in those areas, there's going to be other stocks that I probably like a little bit more. But I like what Netflix is doing. They're moving into online advertising, which I think is going to bolster up their revenue, probably impact churn in a positive way. And I like that they're willing to experiment some of this stuff. They've got some intellectual property, and they're going to launch this into theaters, kind of probably as a test. And I tell you what, if this goes well, you're probably going to see more of it over at Netflix. Moving on to NVIDIA. Shockingly enough, this stock was down over 6.5% today alone, but it started the week at 121.52, ended the week flat at 122.70. In fact, up nearly 1%, believe it or not. This is after AMD announced preliminary Q3 sales. Any company that's doing that these days, it ends up being a disaster. And this was a complete disaster by AMD. That stock down over 13% today. Ouch, that really hurts. They're saying that their third quarter sales are going to come in at about $5.6 billion. Now, I'm referring again to AMD, but obviously there's some parallels when it comes to NVIDIA. The estimates for AMD was at $6.7 billion. They're coming over $1 billion underneath that. And so we got to expect, as we pointed out on NVIDIA's last earnings, that it's probably going to trickle down to NVIDIA. It's going to trickle down to all the chip makers. I think ultimately these stocks are going to be a tremendous buy at some point, but there's going to be some huge volatility until then. Now, NVIDIA is ceasing all operations in Russia and will reallocate its employees there. We pray for everybody involved in that situation. Now, NVIDIA does not expect new U.S. export restrictions to impact business. This is probably a story exclusively to Seeking Alpha, because they said an NVIDIA spokesman emailed Seeking Alpha directly, and they say, quote, "We don't expect new controls, including restrictions on sales for highly dense systems, to have a material impact on our business." So it looks like those Chinese sales probably still going through. At least if they're cut back, it's not a huge deal for NVIDIA. Moving on to Google, start of the week at 96.93. This stock also sneakily up this week, closer to 98.68. That's a gain of about 1.8%. This is after the company said that they're going to invest $100 billion. That's in Japan currency. So that's about $690 million through 2024. That's a pretty sizable investment in the country. I like what Google's doing. We've obviously covered what they've been doing. They're freezing hiring. They're starting to cut back on employee perks, and they're going to take that money and go invest it in other opportunities. And I like that approach. Google is going to launch Pixel 7 phones at $599 and $899, and Pixel watches, which are based on Fitbit, their Fitbit acquisition, from $350 to $400. So they're on the phone side, they're probably priced underneath that Apple iPhone. On the watch size, they're right in kind of that middle ground where there's, I think it's the Series 8 watch. I don't know what number they're on at Apple. The one that was just released, I think, is right in that $400 to $500 range. Apple has a higher end model. When you look at Google's financials, you can't really strip this out because they kind of put it in an other category with other things. But this is essentially a rounding error when it comes to Google, but I think a product they should continue to invest in. Now, Google is choosing South Africa for its first cloud region on the continent. Obviously, the continent of Africa is gigantic, and there's certainly some economic opportunities there throughout the whole country, but particularly there in South Africa. So again, what Google is choosing to do is kind of streamline operations, cut down on expenses, but then take that money, I think, and then go reinvest it in new opportunities in Japan and South Africa. I think that's a good decision by Google that'll pay off in the long run. Moving on to Microsoft, started the week at $235. This stock was down over 5% or $12.55, but it was basically flat on the week. End of the week at $234. That was down by about 0.45%. We got a blitz of news on that planned Microsoft acquisition of Activision Brazil, giving them the all clear on that purchase with no restrictions. The EU is going to gather rivals' opinions on Microsoft. So this will be Sony, this will be probably Take-Two Interactive, maybe even Amazon and Facebook and other companies out there to see what they feel about this acquisition. This is part of the process when you go into, I think it's maybe called a stage 2, or I'm not exactly sure the technical government term of this, but this is standard practice, and it shows us that we're starting to reach the finish line when it comes to this. UK regulators are setting a March deadline to rule on that Microsoft planned Activision deal. I would guess they're be one of the last people to approve this. And finally, the FTC's decision on Microsoft's Activision deal will come by late November. And what we've been telling you here on the channel basically all year is this deal was going to be approved after the election, after these politicians can get that money from Microsoft. Now, here's an interesting story. Hedgeye has named Microsoft as a new short idea. They're saying that there's about a 20% downside risk in Microsoft, noting that the company's growth is likely slowing and the appropriate valuation will change as well. And we'll see. I think it will depend a little bit on this acquisition of Activision. Get this deal finalized and get these revenues and these earnings and the synergies onto Microsoft. It could make the growth rate, while probably not spectacular over at Microsoft, make it a little bit better. Whereas this deal falls through, certainly $3 billion breakup fee, but now the company would have a ton of cash and will basically be back at the drawing board of trying to come up with a reason and a use for that cash. So certainly an argument there from Hedgeye. Microsoft continuing to invest in the gaming space as they are looking to potentially invest in an Indian gaming platform called Zupi. This would be about $100 million investment in the company that was last valued at about $600 million. Moving on to Tesla, start of the week at $260. This wins the award for down the most this week, down over 8.3% to $223 per share. It dropped into our buy zone, so you know what I did this week when it came to Tesla. Now, Tesla shows off a humanoid robot supercomputer on its AI day. This obviously came towards the tail end when I posted the video. By the time I posted the video last week, this event was about 5 p.m. Pacific time. I did watch the vast majority of it. In fact, I watched kind of an accelerated highlight replay of this. I saw a lot of criticism for this, and I think maybe even just a year ago, 2 years ago, certainly 3, 4, 5 years ago with Tesla, I think we all would have just laughed at this. But what you are seeing with this robot is simply a consolidation of all the stuff Tesla has already perfected, in my opinion, with the car. So they're taking the battery pack, they're taking all the sensors and the vision, they're taking the manufacturing processes, they're taking the AI and the computing power that they already have demonstrated with the car, and in my opinion, in a spectacular sense, and they're trying to vertically integrate that into another product where the company has a specific use case for this. Some investors in Tesla, some haters, certainly the haters in Tesla, are going to laugh something like this off, but I actually think this could eventually be a very significant product. Keep in mind, obviously, when it comes to Elon Musk, he always overpromises and underdelivers. But what we know about Elon is he can't, when and if he does deliver, it can be spectacular. And he's saying that they're planning to bring this robot to market in 3 to 5 years at about $20,000. I can think of one company that we cover every week here on the show, Amazon, that would potentially be a large buyer of that. Because imagine replacing some factory employee that you have to pay dental, healthcare, retirement, give them breaks and time off, and have to pay them a rising wage every single year. Imagine if you started replacing them with a $20,000 robot. I think that would probably be beneficial for the company. Now, Tesla is called an AI sleeper that could take on NVIDIA. I don't know about that, but I think it is underestimated, this company's ability to grow this area of the business. I know to many of you watching, having a car that drives itself may not be impressive, may not even be a product for you, but certainly that technology and the skill that was required to build that technology certainly could be transformed to other industries. Now, PepsiCo set to receive their first Tesla semis in December. This is just up north to me in Modesto, California. So I'll probably see these tooting around on the highway at some point. These have a 500-mile range, and they're going to start at about $180,000. That's a lot of money, and they are eligible for a new $40,000 tax break under that, quote, Inflation Reduction Act. So we'll see how these sell. Obviously, Pepsi is still, I would consider this more still of a pilot where they start developing these and they deliver them, to Pepsi, and they try them out over maybe a 6-month period, 8-month period, and then maybe we start to see momentum here. I tell you what, a product that has a $180,000 price tag, probably a little bit higher now, and a $40K tax break is going to be beneficial to both parties. Obviously, the company that is purchasing this can be very beneficial from a fuel cost, also public relations, showing that you're going green with these trucks. Obviously, for Tesla, they get the revenue, but I think we're going to see a massive shift in the semi-truck industry where you're going to go electric, and Tesla is one of the few companies that can deliver end to end for you. Because it's very expensive to charge these things. You're going to need these big megawatt power backs, and Tesla already has that technology, and so Tesla, I think, is well positioned to capture this market. Now, $180,000 price tag, I tell you what, if they can get just a little bit of momentum with these trucks, I don't think it's priced into the revenue estimates. We're seeing a year out, we're going to go from $22 billion in the upcoming quarter for Tesla to about $32 billion over the next year. Obviously, that's probably factoring in a little bit of semi-growth, but it's a little bit of a wild card and probably some upside there. Now, Tesla is lifted to investment grade over at S&P. This is in terms of its debt. So if Tesla wanted to raise money, they'll be able to do it at the lowest rates possible. Now, Elon Musk clearly doesn't want Twitter and probably won't invest much time there, according to Loop Ventures. I tell you what, here's the thing about Elon Musk. Like him or hate him, I think the thing that everybody can agree on, and if you don't agree with it, I don't think you can analyze business very well, and you probably should open up a Charles Schwab account and invest in passive ETFs. The thing about Elon Musk, okay, the thing he has proven time and time again is he can put people in place that execute. You look at Tesla, you look at SpaceX, you look at the Boring Company, you look at really SpaceX and Tesla. Whoever he's putting in charge over there is absolutely delivering. Now, they do it on the timeline and the expectations and kind of the frothy expectations that Elon Musk puts out there. No, that's Elon's fault though. But what he is brilliant at is actually putting people in place, putting teams in place, putting systems in place to develop a product and develop it profitably and be basically miles, if sometimes years ahead of the competition. I'm not saying he's going to have a success over at Twitter, but Elon Musk's time, I think, is going to be a moot point. He's going to put people in charge over there that are going to do all the work, and he's going to do what he wants to do. Now, Tesla to report. Actually, they reported their record delivery numbers. This was actually last Saturday, I believe, after our FAANG stock recap show. They produced 365,000, nearly 366,000 vehicles. Bloomberg's estimate was actually quite a bit under that. Bloomberg was expecting close to 360,000 cars. This is produced, this is manufactured. Tesla doing a shade over 5,000 more than that. But when it came to deliveries, actually getting those cars to the customer, the company delivered just 343,000 vehicles. Bloomberg was expecting a number about 14,000 higher at 357. This is really more of a supply chain thing. It's probably a trucking thing as well, getting these cars from whether they're in Texas or Germany or out here in California or China to the customer, the end customer. I don't think we're seeing a slowing of demand for the cars yet. I think the major thing that would slow down or will likely slow down the purchases of Tesla are those interest rates. I tell you what, you go try to get a car loan right now. I don't know. I locked in a really nice rate for mine. I think I'm at like 2.5% on my cars. I bet now you're looking at probably north of 7 or 8% if you try to go get a car loan on one of these things. Moving on to the technical segment of the show, that is the Tesla chart. We'll get to that here in a moment. We'll start with the S&P 500. Not much, okay? We had that initial rally earlier in the week. What I've done here is I've marked out on these black lines, really the lines from a technical perspective, but also what I've been hearing shouted out by the pundits and the technical analysis out there. We're sitting on an area of support here. We'll call it right at 3,600. Currently, S&P 500 is at 3,640 or so. The bulls are going to defend that area. If you break down below that area, there should be an area down here at about 3,400. That's likely the next stopping point. So you got another 200 points, and then you've got another area even further down at about 3,200. So you got about 200 points in increments on the S&P 500. If I were to sit here today and give you my prediction, I think we're retesting these areas. Maybe not to the number on this bottom one, but I think we're probably retesting these areas. And so look, if you have a shorter term outlook on your money, I've said it over and over here on the channel, you should be out of these markets. You should be cleaning your golf clubs, checking the lie angles, and getting your grips ready. Okay, I would not be paying attention to these markets. I would have my money in cash or bars of gold or whatever you want to do under your mattress. I don't care. A money market fund is probably one of the best areas to have your money in if you're scared of these markets. If you're a long-term investor and you're looking to double your money over the next 5 to 10 years, these are the gifts that are given to you in these markets, and I think you should take advantage of them. Moving on to Meta, we're just hanging out down here. We made a new 52-week low here. We've talked about how I think we're probably retesting the bottom of this channel, which would take you down another, we'll just call it $5 on this one. That would be a buying opportunity. We do have earnings coming up on this one on October 26th, so we're a couple of weeks away. I'll have earnings previews on Meta so you can get a good idea. But I think with Meta, we're going to set up at the bottom. And if I tell you what, you got some guts, you can buy these companies as they set on the bottom. And if there's at least a semi-decent report or semi-decent guidance, well, not that you're going to pop all the way to the top of the range. That would be like a $20 move on this stock, but you could get a nice pop off the bottom. The risk though is you dump out the bottom on this one, a la maybe like a Netflix that had a dump and then another dump. Whether or not that materializes with Meta, I mean, you've got a $358 billion valuation on a company that clears $30 billion of revenue in a quarter. Seems like pretty reasonably valued to me if you have a longer term focus. Moving on to Apple, this one staying above our area of support here at 136. I have not bought Apple. I guess what potentially could happen if the markets just kind of consolidate or find some footing? Well, you created some lows back here in June. You could create a higher here set here in the October months as well, and maybe rally back up and retest the highs that we made back in August at 175. That would be the bullish sentiment. A more probable outcome, I think, is you kind of dump towards the bottom of our support down here at about 115. Apple's earnings coming a day after Meta on 10/27. So we'll certainly keep an eye on that one. I think earnings going to have a major impact over at Apple. Moving on to Amazon. This one's gotten so close. I've talked about how $100 is kind of my initial buying opportunity. I think with Amazon, I'm already overweight Amazon. Depending on how well Amazon is doing versus Apple, they kind of flip-flop in terms of the most valuable stock in my portfolio. I don't mind buying this one to a very small degree, about 10% higher than 100. So that would take us up to about $110. We've stayed above it. Maybe everybody's watching this video and they're looking at the same thing I am. We are still making lower highs. We are still making lower lows. I think the momentum on this one probably continues to go down. We should have an opportunity to get this one at 100, maybe even potentially south of 100. The wild card is that you have Amazon earnings on October 27th. And depending how this company kind of pulled strings and pulled the levers inside of its business, who knows what it decides to do. Also, when it comes to all of these companies, it's not necessarily going to be the most recent quarter that investors are going to be worried about. It's really the subsequent guidance that they provide, how optimistic or how pessimistic they sound. That's certainly going to drive this stock. But for right now with Amazon, the momentum still is down. But if you do get a reversal in these markets in the shorter term, well, you would have, again, created lows back here in June, another series of lows here in October, and you'd expect to retest the highs up here at about 145. Until you get over 145 on Amazon, which is over $30 from where the stock is right now, I would actually consider the momentum still going to the downside on Amazon. Moving on to Netflix. This one's just chopping. It really hasn't gone anywhere over the last couple of months. It's been in kind of a $20 trading range. It's about a 10% move up or down on this one. That is good news in some ways because a lot of stocks have not performed that well, but you're not getting any price appreciation on this one. The story's the same with Netflix. I'm looking for a break above 250 to kind of play this kind of gap fill up here, or if it breaks down after earnings, depending on the news, depending on what sends it down, I could see if you got a negative report, negative guidance, negative subscription number, you could go from 220 down to about 200, maybe even a lower than that on Netflix, and that could create a buying opportunity. Now, Netflix is the first to report of this group. They're reporting just 11 days from now on 10/18. I would not step into this one before that date since we are so close to that. Moving on to NVIDIA, we've got a lot of lines on here, but I really think the only ones that matter at this current time is this downward trend. We are locked in it. In fact, most stocks are kind of locked in this range. Anytime we push towards the top of this channel, in fact, we did earlier this week, it gets completely rejected. Obviously, the AMD news did not impact this stock in a positive way. I think we retest these March 2021 lows of about 115 on the stock. I think we do that in short order, probably as potentially as early as next week. If you break through those, I think it's a signal that you're going to get cut in half. The cut in half mark was when this one was stuck at about 150. I made the prediction here on the show and on the earnings video that I did for NVIDIA. I think you're coming down to about 75, 80 bucks on this one. I don't think this company is going to be insulated from all the problems that we've seen at AMD, that we've seen at TSMC, and that we've also seen at Intel. I think this stock has got further to go down. For anybody that holds that stock, I certainly hope I'm wrong about that. Moving on to Google, it's found a little bit of footing. It's had trouble getting lower than about 95, but it can't get above 100. So this is where this stock is hanging out. I think it'll hang out in that region until about 10/25 when we get Google earnings. We'll certainly be very closely paying attention to those. Until then, I think you could accumulate this stock if you want. Just understand that your risk is likely retesting somewhere down here on this channel, down here south of $90 per share. What it would take for Google to go even further down 90, interesting. But here's the broader view. A lot of you watching this stock show have a longer term focus. And here's the one thing that I want you to keep in mind. Google has a market cap of about $1.29 trillion. I want you to look 5 years out, 8 years out, okay? And imagine this company doubling to a 2.6, 3 trillion valuation. I think it's plausible. I don't necessarily think it's likely, at least in the shorter term, maybe the 4 or 5 year time frame. But I think you start looking 8 years out, it's certainly likely. I think that you could double the valuation. And if you put a growth rate on that, you are probably beating the broader markets. Moving on to Microsoft, after that short call, it really just retested kind of a 52-week low down here at about we'll call that about 233. There's an area of support here right at about 230. I've accumulated a small amount of Microsoft in this area, but I'm just waiting. We've got earnings with Microsoft coming on 10/26. In fact, that third week of October is really when we're going to get all the earnings with these companies. So you better buckle up. It's going to be a big week in terms of market action that week. But a bad earnings report, bad guidance, something in that Activision deal could send us down from 230 down to about 200. I think you'd retest 200 on Microsoft. That's a back the Tesla semi-truck moment on that one. Now, moving over to Tesla, this was the one stock that I bought this week. I talked about how I thought it was a likelihood once it looked like we lost momentum up here in this range. We created highs, lower high, lower high, lower high. The momentum started coming down. I said, well, it's high likelihood we come down here and retest this channel line. I love this technical setup. The longer term trend, obviously, with this stock is straight up in an arrow. And nearly over the last 2 years, not quite, basically the last 18, 19 months, every time you've tested this lower area here, it has rebounded. So we stepped in on Tesla today, just in a small way, but I did step in on Tesla. The risk, obviously, is you got earnings with Tesla coming a day after Netflix. So we're 12 days away from Tesla earnings, although somewhat telegraphed, the fact that we know the delivery number, we know the production number, we know likely the mix of products. We don't know really the FX impact. We don't know the vehicle gross margins, but we can assume kind of in a ballpark range where it's going to be with Tesla. So the actual earnings date for Tesla, not necessarily as significant, I think, as just the pure momentum in this type of stock. The risk is that we break this 2-year trend or 18-month trend and you break to the bottom. If you do break through that, the next area of consolidation is right around 150. So that's a gigantic move from about 220 down to 150. So that's your downside risk with Tesla. The bull case argument, as the stock finds its footing here again and then rebounds, you really need this one to retest probably these highs that we made back in April and May. That's $140 upside. In a stock like this, I think you need just broader market optimism, and at least at the current time, investors are very focused, obviously, on the CPI number that we'll get next week. They're very focused on those unemployment numbers. They want unemployment to go up. So they actually want people to start losing their jobs. In the shorter term, a lot of this makes a little bit of sense, but in the longer term, investors are not going to be focused on a higher unemployment rate being good for stocks. And eventually the Fed is going to take a pause. Whether or not they pivot, I don't know. And I don't think anybody knows. Even the Federal Reserve doesn't know. I mean, these guys are pretty much idiots, but at some point they are actually going to hit the pause button. And that is going to be a nice area where stocks start to find footing, and momentum stocks probably make a nice U-turn, probably being an opportunity in Tesla. If you want to wait for those all clear signs, you're more than welcome to do that. In my experience, my over 20 years in the stock market, when you're waiting for the all clear sign that every single other investor is waiting for, and that every single investor is talking about on CNBC or Twitter, and every macroeconomist is telling you to wait for, well, greed being a natural human instinct, certainly when you talk to stock markets, well, there's going to be a lot of front running that. And actually, it's the people that get out in front of these things and actually take that risk. Those are the ones that actually get the largest reward. Hopefully you guys have a great weekend. Be safe. We'll be back again next week. We'll start doing some earnings videos next week with the bank stocks. We'll have some previews as well going along with that. Hopefully you guys have a wonderful weekend. Good luck with your investments.